And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon and welcome to the market recap for Tuesday, the 31st of May. My name's John. Glad you're here with me. I always like to just chill, sit back, look what happened in the markets today. Always enjoy talking trading with traders, so looking forward to seeing what we've got going for us today. As far as the news, the S&P futures looked like they were going to finish just about dead even. The monthly bar opened at 41.44, oh so long ago, the beginning of the month. Looks like we just kind of closed here that 3 o'clock at 41.32, 12 points away from where the market opened the month. Very busy, very volatile market, basically closing right where it started. Is that good news? I'm going with yes. I think that's good news. We've come off the lows. Maybe seeing some opportunities for us to see some movement to the upside. Of course, anything is possible. Anything can happen. ACH, that's our acronym here, ACH. Anything can happen. But I think it's a good sign that the market did not have a huge change in price over the entire month. Home prices. Indices that came out earlier say prices surged 20% in March. 20% in March. Consumer confidence increased as well by more than expected. So perhaps some bad news as far as inflation is concerned with housing prices, and maybe some good news as far as consumer confidence, which may actually end up being bad news, according to information regarding inflation. As far as the markets today, $120, just shy of $120 in crude oil, which proves to be too expensive for now. Market came off of that, provided two really nice opportunities, one long and one short at our weekly kickoff high level at 116.40. We're going to see this in the charts later. E-mini S&P's early weakness finds buyers right to the last week's high. We talked about that level being somewhat pivotal for us today. It proves to be resistance right as we kind of closed that potential island top, although I wasn't that concerned about the island top because yesterday there wasn't any real participation anyway. Anyways, we're going to see that in the charts. The NASDAQ, the gap close also alleviates the risk of a potential island top. Gold, last week's low, targeted after overnight inventory adjustment. It's going to be an interesting, I think, opportunity, perhaps in gold coming up in the coming few days here. Euro, short time frame control just remains very range bound. The 10-year price stops short of the target-rich environment we talked about this morning on the market forecast. We're going to see that in the charts as well. There's a nice area where we're thinking we might get to see some big fish, but we did not quite get the boat out that far. We're going to take a look at that again. And the natural gas weekly kickoff low, targeted. We're going to see if we find some opportunities off that level for us tomorrow. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the recap. Got to say good afternoon to everybody. Yes, Glitter Sandwich, you win the prize. First in the room. Spencer saying winner, chicken dinner. Dylan, chilling with Dylan. Crap day in the combine, amazing day in sim. Go figure. It's kind of funny how that works, isn't it? The trading combine just does such a good job of mimicking real risk. It's just harder to make those tough decisions. Good afternoon, Tachyon. Down 300 in the trading combine. Good trade execution. Still desired. Day one for discipline tomorrow. Too many losing trades in a row. When I'm talking to traders on a one-on-one basis, and we're trying to find the level of either losses in a trading day where we start to kind of become emotional, or whether it's a consecutive number of losing trades. And I find that it's not so much for me about the amount of losses, it's the consecutive losing trades that tends to flip my switch. And we all have a flip that can get switched. Good afternoon, Frederico. Vince, my man, good to see you. Spencer prefers to make his money early and be done with it, which we did this morning on Make Hogue Money. I want to thank everybody for joining me for that again today. Came to trade and only charted. Well, that's okay, Vince. That's all right. We've got to get to pulling the trigger on these trades, and it just takes time. I know you're working very hard at it. Ocean Blue, it is absolutely my pleasure. Scott saw, and hopefully you conquered. Kyle, good afternoon. Lost my express funding, but taking time to reevaluate what went wrong. Absolutely. Always look left. Possibly experienced burnout and took unnecessary trades. We'll get back on the horse. Kyle, that's the right thing. And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
I don't quite understand why that happened. I thought I had all my gremlins. It's got to be something I did. I got all the gremlins. Sorry about that. Too soon for credits. Yeah, sorry about that. I don't know what happened. I must have hit the wrong button at some point. It's all right. It's all right. So Scott had a conquering morning. Took last week off, came back fresh with the charts. Nice job. I don't know where I was, but just good afternoon, everybody. It's always a pleasure to see everyone. And again, I apologize about that. Well, that was weird. Yeah. Ocean Blue, thank you. It's always a pleasure to be here with you. Thanks for joining me. Oh, no. Not the intro music again, Dan. Yes, and NQ both ran into brick walls. Monday's opening range was today's high during regular trading hours session. Frederico, oh my goodness, those look like gremlins. Get those out of here. So again, I apologize. All right. Tomorrow is group coaching, 1 p.m. Central tomorrow. I've just put the link so you can register for group coaching if you have longer questions that we can't really get to in the forecast or recap. It's a great place for us to meet up and do that. Nobody knows everything, of course. Nobody could possibly know everything, and I certainly don't. If there's something I don't know, it gives me an opportunity to stretch, to learn myself. I think I learn more from you guys than you learn from me, and I always enjoy those. So I look forward to seeing everybody in group coaching tomorrow. Today's Make Hogue Money. Thank you all for joining and voting in the trades. We had 2 tasty winning trades this morning, one off the opening range to the short side, We found a way back in for continuation to the downside. We had a target that I 10%ed our way out of. We never would have reached our target had I not done that. And then the markets turned around and headed up and put in the highs. So it is a great day for trading. I think we made about $1,400 in Make Hogue money, and you guys voted it in. So thank you. All right. Let's see here. Just want to see one thing. So settlement in the S&Ps from today, 41.31 quarter. So we do have a down month, but not by much. Not by much. Let's jump in and take a look at these charts. Start with the daily and crude. Now I'm going to change this, and hopefully it doesn't go to the opening again. Now we've got our charts. All right, so this morning we were looking at Friday's volume and open interest were appearing to be pretty healthy to the upside. We were looking at the fact that we were opening a little bit higher. We had nothing really but space above, but 120, a big fat round number, ended up being where we put in the high for the session. Take a look at this. So we have all of these longs. This is Sunday night. This is Monday's session. This is last night. Settlement was all the way down here. We know that it's not a settlement day on Monday after a holiday or during a holiday like that. So settlement was 115.07. So we had a lot of longs in this market. When this market opened and put in this high and started one time framing lower, I thought, okay, here's a pretty good opportunity. And I think we talked about this on the forecast this morning, where we said, okay, we got a whole lot of longs here. If this market gives us an opportunity to look for an execution around this 116.40 level, that looks like a pretty good level for us to be able to, number one, limit risk. So when the market came down there, I was in a meeting or something talking to somebody, and I said, wow, this looks good. This looks good. So if you took the long, it was worth, let's say, where was the low? It got down to 116.45 within 5 ticks of that important inflection level, and it traded all the way up to 117.87. So we had a pretty decent opportunity to take this long, see 17.87. So we got more than 100 points off of this low once we had the opportunity. You had to sit in that trade for a while, but you know what they say in trading, 100 points is 100 points, or 100 ticks is 100 ticks. Then once we got back down to this level, when we broke out below the previous day's regular trading hour session low, the previous low from the regular session, there was quite the push to the downside. There was a bunch of stops, and this market just really tumbled to the downside before finding the kind of value inside of the last Friday's area of value before falling into some kind of range. So these important inflection levels, these weekly kickoff levels, offer opportunities, number one, to limit risk. If you took the long the first time down, you got about 100 points. If you took the long on the second time down, hopefully you did not have you didn't risk too much. You didn't have to. And when you saw what happened on the other side of it, and the momentum that started to get created, you had a pretty decent opportunity to the downside. So nice trades in crude oil based off of weekly kickoff high today. Here's the mini S&Ps. Okay, we had a Friday melt up. We did actually end up putting up a island top yesterday, but there was absolutely no volume. I don't really put that much stake in an island top where there's no volume, just created by a holiday market. So we saw that, this morning we were kind of looking at the news and seeing there seemed to be a refocus on inflation and employment, and we had some inflation numbers today. We have employment later on in the week. Here's how the day played out. The opening range was the high of the session. This was one of the trades we took in Make Hogue Money. We took the breakout of the opening range, which is the first minute of trade, and we had a pretty decent trade to the downside. We looked for an opportunity to get back into that trade. Actually, I think we traded and we got out at the overnight low. We had some idea for potential consideration for a continuation to the downside. When the market came back up to it, we took that trade and we took another, 12 points in that trade. If you remember, you were in Make Hogue Money, we had agreed on 4,100 as a target for that, which I usually will stop I'll get in a couple of points closer to that for my profit target, which put us up at 41.02. And when the market got down there, I said, this is close enough. I have what I call the 10% rule. The 10% rule says anytime a price is within 10% of a profit target, I can take it and consider it a complete profit target execution. So we did that here. I think we paid 41.03 and a half, and we never did get to our target. When we get the market that comes back up here, okay, last week's high, which I got in my notes here, was an area we were looking for an execution for perhaps today. If we got it, we had a pretty decent move to the downside. Now the market has kind of rotated open, lower, rotated higher, back to the center. The monthly bar almost looks like a doji, like it's a month of indecision. Take a look at the NASDAQ now. NASDAQ, which was presenting as stronger, kind of proved a little bit stronger. It had an opportunity to see price above last week's high and did not accept. We have what appeared to be a potential island top. An island top is price comes up to it, gaps to a range, gaps away from a range, and then you get continuation to the downside. However, in both the S&P and the NASDAQ, we have our recent high in overnight session. Markets don't necessarily like that. They don't like it when it's an all-time high for sure. Here's the S&P. This is a recent high in overnight session. Markets don't like to leave that there. They like to come up and take those out in regular trading hour sessions. Didn't happen today, but something I'll be monitoring for as the week progresses. And we've only got 3 days left this week. We had that Monday off, so we got a lot of work to do. Again, no island top. The market opened with a gap, came and closed the gap, which alleviates any risk of a potential reversal to the downside caused by an island top. And remember, our overnight high from Sunday night puts in the high, the recent high, which, again, markets don't particularly like. Gold. Rollover range continues. Getting a pretty decent push to the downside here. See some pretty good volume after the roll here. We didn't do much as far as changing in open interest inside this. This might be a potential move here. What's the 30 look like? Sound. You should be able to hear me, my goodness. Can you guys hear me? I know my goodness is asking about sound. It appears as though we're able to hear. You should be able to hear. Okay. All right, good. It's okay again. All right, my goodness. My goodness. So here's gold, largely range bound. Okay, good. Last week's low, last week's high. This might mean something for us. We've got plenty of space down below here. We've got this little swing low here. from more than a week ago, and we've got a lot of space down there. We've got weekly kickoff low 18.70, this point of control right here. So we've got space, we've got target, we've got visual. You have to see how this market acts tomorrow. We opened with a gap, we closed the gap. The gap to yesterday's week session ended up being resistant, and we're seeing some continuation. We're going to keep an eye on this because gold has largely been kind of off the radar during rollover, but it seems to be maybe bringing some new opportunities for us. So this is the euro. We're kind of looking above the last week's high in the abbreviated session yesterday. Really just remaining range bound. 1, 2, 3, 4, 5, 6 days. If you call this a day, that's a little bit of an anomaly. The market did take down and trade two visuals, this point of control here and this naked volume point of control here, really put in the low very nicely today. So I'm still looking at this as a market that's in short time frame control and range bound. Okay, if you remember this morning, we were talking about the 10-year. I'm going to put the daily on here. We got weekly kickoff low. We've got last week's low. We've got a lot of important information along this line right here. Here it is on the 30-minute chart. So we've got a naked point of control. We've got weekly kickoff low. We had in the opening here during the forecast this morning, we were coming real close to this area where we were looking at really some fine opportunities to catch some fish. We just stopped short. We didn't quite get there. It doesn't mean that the opportunity may not come for us tomorrow, but look at all these convergences. We've got a naked point of control. We've got weekly kickoff low. We've got a previous settlement price. We've got a low of this range that we're in right now, relatively close. We've got last week's low. Everything is just lining up here, and I think that there's a pretty decent opportunity for us to start thinking about getting a line in the water next time we have the opportunity during regular trading hour session in this area. I think there are going to be some pretty decent opportunities off of that. And we've got natural gas, nat gas. Been trying to continue this move to the upside. Overall, in the longer time frame, I think it still looks like a healthy upside auction, but it certainly did suffer over $9 and suffered today all the way down to our weekly kickoff low. We've got last week's low here. We got last week's high here. What does it look like on the 30-minute chart? Okay, we were looking at a range opportunity. We did see that here on the opening 930 bar. We had this low here be supportive for a period of time, but this market really just could not even close this gap and if we cannot close the gap relatively early, what are we supposed to do? We're supposed to trade in the direction of the gap, which is exactly what would have probably made us the most money for us in the regular trading hour session today. We've got a close relatively close to this important weekly kickoff level. It's going to be a little bit crazy. It's going to be a little bit interesting, as it always is. But if I don't see anything, if I don't get a good opportunity, if I can't get in where I can put the line in the water, and I say this a lot, but I'm okay with letting them take the worm. I don't want them to take the whole rod and reel. So, these important levels like weekly kickoff levels and weekly highs and lows and the things that we look at are important to me because they allow me the opportunity to limit that risk. I can give up the worm, just not giving up the rod and reel. All right. Ocean Blue, when you were on the trading floor, did you have an aggressive behavior or were you chill like you are now? Well, you pretty much had to be aggressive on the trading floor. But some people took it overboard. If you had to line me up against other floor traders, I would think you would probably say I was pretty chill. It's a good question. I'll have to ask some of my friends. We had Matt Hoyt, who was a friend of mine in the trading pit. I'll have to ask him that question. It's a really interesting question. Right. Yeah, the 10-year seems difficult. Well, it's in the tools. I think that anytime you become relatively proficient with the profiles, watching volume and open interest, I think it matters less about the product than the context and the situation of the product. I wasn't looking at crude today, but when crude came back to that level, I had to do something. So that's the first time I've traded crude in I don't know how long. All right? Okay. Well, tomorrow we're looking at Beige Book, which is always 2 weeks before the Fed, ISM manufacturing, PMI manufacturing, construction spending, and job opens and labor turnover. Not to mention a couple of talking Feds. Right around lunchtime, we've got John Williams and James Bullard. So we've got a couple of things tomorrow. Thursday, there's an OPEC meeting we got to be paying attention. An ADP employment report, which may be somewhat a tip-off for unemployment on Friday. Still lots to do this week. Get some good rest today. I did not work with Tom Sosnoff or Tony Batista when I worked on the trading floor. Well, you got to understand, my goodness, and Ocean Blue, the ability to execute on the trading floor wasn't only cerebral, it was physical. You had to be loud. You had to make noise. You had to wave your arms. I don't think I could do it now. But you just had to, you had to make sure you were seen, and you had to make sure you were heard. It was exhausting sometimes. I remember being in the S&Ps from the open to the close, which was 6 hours and 45 minutes, and never leaving, never going to the bathroom, never even really looking at the clock. The opening bell would start, and the next thing you knew, the closing bell was ringing. It was some busy times there and some slow times. I mean, it wasn't always like that. There were times when we stood around a lot, told jokes and goofed off and, did whatever. So, all right, I'm going to run. Looking forward to seeing everybody tomorrow morning on the market forecast, 7:45, same bad time, same bad channel. And we'll see what the markets look like tomorrow. Get a good night's rest. Don't forget to be kind to yourself, be kind to others. Keep praying for world peace. And be cool. We'll see you in the morning.